Okay, let's talk about range bar charts. Why do I personally trade them, and why do I feel they're better than trading, say, time frame or time-based charts? Okay, for one, I said this plenty of times here on my channel about range bars. They're easier and cleaner to the eye to follow. I don't have to worry about those large wicks breaking above swing highs and swing lows. Kind of confusing and trying to figure out which way is the market trying to move. Okay, are we reversing based on these large wicks breaking above swing highs and swing lows, and really trying to determine where the highs and lows of a swing are. And when you've got these big small maybe candles and then these large wicks that break above an area, that can kind of get confusing. But not just that, it makes the charts look cluttered. All right, so range bar charts I feel are a better option because they're just easier to see flow of the market. All right, in reference to structure of the market, looking at price action, just easier to break down when you visually put your eyes on the actual chart. So to me, they are the easiest charts to actually read. Okay, I'll say that again. I believe range bar charts are the easiest charts to actually read when it comes to market structure, trying to understand that major component in day trading. Okay, for me, I trade the futures, and I'm looking at these range charts. In particular, let's say I'm looking at the NASDAQ futures. I'm reading or basically looking at the broader perspective of what's going on a more global perspective on my 120 range chart to start with. Now, the strategy and how I actually trade, if you want to call it the blueprint, the cornerstone to my strategy, I talk about that a lot here on the channel, but more in specific to I really break down and emphasize the strategy to the private community. And maybe you want to choose to become an elite or an ultra elite supporter of the channel, and I'll talk about that towards the end of the video here, because it is really the cornerstone to how I trade using supply and demand. Very simple simple concept, not anything complex about it, but you're going to really need to put in the time and the homework to back test and forward test the strategy, because I know that some strategies don't work for everyone, and some may work for a few, some may not work for others. So you're going to have to find your own edge. We do have a Discord community where traders like myself are engaged, and that post our trades over on that community. But I go back and I break them down more in detail, the actual trades I take for the elite and the ultra elite. Again, I'll talk about that tier or that supporter private community, because that's where the nuts and the bolts, the sauce into how I actually trade, the strategy in which I trade. And I'll break that down more so towards the end. Now, if we look here at the range bar chart, the higher chart, my 120 on the NASDAQ, you can see how easy it is to really understand and determine what's going on with the market. Are we moving higher, making higher highs and higher lows? Or are we making, swinging back to the downside here, making, lows, lower highs, lower lows, and lower highs to the downside? The bars are pretty much equivalent almost in a sense. I mean, you will have some bigger candles than others, but that's really emphasizes, the momentum behind the push within the actual market itself. So that's what I'm looking at when I'm marking off my zones as far as supply and demand. What are the candles looking like when they're breaking above specific areas and creating these supply and demand zones? Okay. Again, this is on my range bar charts. Now, I just want to quickly show you an area in particular. If we look here at this low right here on Thursday, October the 30th, we can see we have a low here, and then the market makes a high, higher low, and starts pushing back to the upside, right? This is a nice, smooth transition for the market is basically, kind of moving higher here. We can see it makes its first attempt making a high, higher low, higher highs, higher lows, and more highs to the upside. Okay, so we are and once this happens here, we can see that the market has imprinted basically a high right here. And we do have say for example, a high here, and then a low right here, and then it makes a high right here. So we're basically in between two major points, a major high and a major low. And, we're looking to see which way the market is going to break. Will it break to the downside and take out this low, or will it start swinging to the upside and take out this high here and this high right here? We'll talk about that component in understanding market structure more so here in a second. But focus on this area right here, okay? Because I'm going to show you an example of what I mean by these large candle wicks They can kind of get confusing when you see them, but you won't see them on the range bar charts, but you can see them. And to me, they look a little messy to the eye when it comes to the 5-minute chart trading, or time-based charts. In particular, like the 5-minute, it could be a 60-minute chart, a 15-minute chart, or whatever the case is. But those long candle wicks, I don't like to see. I like to see smooth transitions, smooth flow in the market, and the range candles actually, or range bars actually give me that. So move to the upside, pullbacks, and it breaks right here. You can clearly see that, right? You can see a high, a higher low, and a higher high moving to the upside. Now, if we take a look here at the 5-minute chart, focus on this area here. This is that same high right here, which I'm going to show you around 26,040. I'm sorry. I meant to say 26,000, say 54, 55 area. Okay, you see it? High, higher, low. We break above this area structure right here. Now take a look at this on a 5-minute chart. Okay, time frame chart. Look here, same area right there, right? But look at the long. Right here when we have this low at, the market is already breaking structure. You see to the upside on what? On the 120 range chart, my range bar chart. But here we've got we've got a high created here, right? And then this big ugly wick on this candle right here, right? Kind of like a doji candle in a sense, or and then we have this long wick on this candle right here, right to the downside, and then a kind of a smaller but still large wick to the upside here. I don't like to see stuff like that, okay? Because I don't know what is going on when I see things like this right here, these large wicks on candles. Again, if you look at the range bar chart, look how beautiful it looks. Smooth to the upside, smooth to the downside, and breaking higher. It was this area right here on that red candle right here, on that 5-minute chart where we had that long wick down and then coming back to the upside right here. I can still see this right here, high, higher, low, pushing to the upside, small pullback here before you massively push to the upside with lots of momentum. Look at the 5-minute chart again. Okay, take a look. Pushes up. Nasty wick coming to the downside. This will throw a lot of people off, like, okay, what are they doing here? Is this candle going to? Because at that time, that candle right there, I'm sure, was probably looking real, bearish to the downside before it starts pushing back to the upside. Now, again, granted, this is towards the close of the market, but this happens a lot throughout the intraday session itself once the market opens up at 9:30 Eastern time. I'm going to show you another example here in a second, but I don't like to see things like that. I like to see smooth transitions where the market is actually breaking structure and taking out either a new high or making a new high or taking out and making a new low. All right, another example I'll show you here. Okay, this was actually during the session itself. You see how we're making this low here, a lower high, and then breaking lower right here. Okay, so we're kind of chilling to the downside here. The market has already made a high here, which is basically going to be a major high, and then it makes a lower high here, and then it makes a new low, or a low here, and then a lower high, and then a new low right here, right? Then the market turns back around. We break, start pushing back to the upside. We do make a high right here. Okay, we do make a high right there. Because at that point, we're trying to figure out, okay, what is the market going to basically do from there? Is it going to come down and take out this low here it just made, or is it going to come up here and start taking out this breaking structure back to the upside and taking out that high right there? Either way, what we're looking at is this area right here. Okay, look, we got to push up. It makes a high, okay, right there, and then it starts coming back down. All right, and what does it do? It breaks below that low right there, which I just talked about. Okay. So pay attention to this area. I'm going to show you where the market made this high right here. I'm going to show you where this long wicks come above that high there, which I don't like to basically see. It makes a high right here. We're close to the VWAP right there. I'll bring the 5-minute chart over just to show you. This is the area right here. Look, we've got a high created right here on this bullish candle to the upside. It starts to come down, bearish, and then boom, we get this big wick of this candle on this this bearish candle to the right here, and it breaks above that high right there, pretty much, wicks above it. I don't like to see stuff like that. I like to see where the candles are looking kind of equivalent and things are kind of flowing, either to the upside or downside. We broke above here, so we basically made a high here. Then it starts to come down, and we get this wick right back above this high right there, that bullish candle. We don't see that taking place here on the range bar charts. That's what I'm talking about. That's why I prefer to trade range bar charts. They're cleaner to the eye. They're smoother. I can study and follow the flow or order flow of the market more so, and looking at, candle position and movement in reference to price action. But understanding structure makes it a whole lot easier as well. Because if you look at the range charts, look here. All right, I'm just going to show you. We made a high here, right? Okay, you should notice that if we're swinging to the upside, making highs, higher lows, higher highs, dips back, make a new high here. Okay, we're breaking structure each time we make a new high. So we got a high right here. The market, it prints that. Then it comes down. We got a low, lower high. This is market structure where we're following, okay? makes a lower high here, and then it comes down and it breaks and makes a new low right below this area. So we're looking for to see where is the market going to basically transition and reverse, basically making this could be like, for example, it starts to break below this, it breaks this low right here. We could then, it could be potentially look into that can set the tone for a bearish channel back to the downside, which it did. We had a high here, okay, right there. The market comes down, makes a low. Well, really, we made a low, lower high, a low here, lower high, breaking below here. So we're pretty much bearish at this actual time right there, moving to the swinging to the downside, and we can see it right here. Then we get, so again, we're making this breaking below this area here. We've got a bit of a reversal coming to the downside, right? But we do imprint this new low right here coming to the downside. All right, so then the market goes back up there. It makes a high there. So now we're in between, like, again, like I said, this major high and this major low. Now the market comes down, all right, and it breaks below this low right here. You see that? So if the market was to pull back, say for example, exact or immediately to this area right here where we had this this supply zone right here, I'd be interested in going short. But the market has its own mind. It wants to make a low, lower high, and then make another lower low right, right here. Then basically once it starts making these new higher highs and higher lows to the upside, it breaks above this area here. Basically you can look for it if it was, say, a high here, a higher low, and a higher high. It came back and it tapped this little swing right here where it broke structure to the upside, tapped it and went higher because it broke above this high right here. This high was created when it made this low right here. It came back and it broke above this area right here, the little swing there. It made a high right here, comes down. If the market goes back up and it starts taking out, say for example, highs on the way back up as it's making a high, higher low, okay, higher high, higher low, and breaking above here. So we basically broke above this high here. It swung back. There was a demand zone resting right here. You can go long from there. Okay, so I'm going to mark that up because that is a valid demand zone. Let's see. Bring this down a little bit. Sorry about that, guys. And we'll put this is a demand zone right here. High probability. We have an imbalance, a gap resting there, and it breaks back to the upside. So this is what I'm talking about when in reference to being able to look at and study the flow of the market, but understand market structure on the range bar charts, and that it is cleaner to the eye and smoother. This is what I, in my own preference and opinion, this is what I've been talking about on my channel, to the Discord, and with a lot of people who are most of all, who have come over to the Discord and slowly start to understand the reasoning behind just more so looking at the charts themselves and studying range bars. They can see that things don't look as messy when it comes to all those wicks that you may see, especially when the market starts ranging and you see a lot of thrown wicks breaking above highs and lows. That can get quite confusing for a lot of people out there. But again, this is how I do it. Now, I want to say this. If you are kind of confused with market structure and you really want to master that, because I'm going to say this right now, understanding market structure is the most important concept to actual trading. I don't care what no one tells you. Someone can try to tell you some systematic strategy using a automatic system or auto system, whatever the case is, guys. Trade how you want to trade, but I'm telling you, you've got to understand the flow of the market, understand structure, because structure is what's going on. Think about it. You've got to understand what's going on. It's just like I always talk about, like how it's like reading a book to grasp the underlining, story, the message. This is what the message is being told to you right here. This is the flow of the market. You can see it. You got to be able to understand the flow as it's making and creating structure to the upside, reversing, moving lower. That's why I did a great video talking about structure for all those who are like the elite and the ultra elite supporters. Okay, not just that, but you also get like tons of information, which is so valuable. Okay, on the part of that program there, or if you want to become a supporter. But let's break it down right quick. To become an elite or an ultra elite supporter, there's a link down in the description portion of the video. It is very inexpensive, and the purpose and reason why I created this, this tier-based program, which is through YouTube, is to give people an understanding how I actually trade. What am I looking at in reference to these range bar charts? Breaking down tons of examples of trades so you can understand what to look for when it comes to trading supply and demand. If that's your style and how you want to trade, because to me, that is honestly the holy grail to trading, and being able to understand these massive moves that the banks and institutions, make, and being able to see them on these charts. Okay, like this right here. This was a nice, beautiful Great massive move to the upside when market with structure was broken up to the upside. So you got to understand, like, these are the institutions making moves like this. These are the institutions making moves like this. These big runs to the downside or to the upside where you see these big massive red and green candles, institutions. Okay, so I break down trades, okay, and I talk about them in great detail in reference to structure, price action, stop loss placement, profit target areas. Tons of them. I'm talking about tons of videos that you can actually watch, spend time watching them. And, you know, if you come over to the Discord, a lot of people will let you know that how valuable they becoming an elite or an ultra elite supporter is. It can definitely be. But it's also a testimonial section there on the Discord as well, that, you know, people have left great comments and testimonials using the same strategy how I trade, using the concept and trading based using range bars. Okay, very inexpensive. If you find the link down in the description portion of the video, it's titled Ultra Elite Supporter. Once you click on it, a couple tiers will pop up. You see one for the elite, you'll see one for the ultra elite. Click on either one of them, and then it's going to show you that basically the perks and rewards that you actually receive with the price. You'll see how inexpensive it is. It's only like, it really is breaking it down. The price is pennies on the dollar a day. I'm talking about on a monthly standpoint, you're only spending like a couple pennies a day, you know, just by becoming a elite or an ultra elite supporter. But the choice is yours. Now, again, to become a elite supporter, you receive my trade breakdowns, the video playlist, and a great video ideas surrounding market structure. And then if you want to take it one step up and become an ultra elite supporter, you receive everything I just stated, plus the live recorded trading sessions where I record and post my trade sessions. You know, basically breaking down top-down analysis, analyzing the market. I'm basically talking to you and you know, those that are choose to become the supporters, breaking down the market from my standpoint. Sometimes I'm looking at the NASDAQ, gold, even the E-mini S&P 500. But what I'm trying to say is that those recordings, you can also see me engage in trades that I actually take live, and then I package up that content and that video, and I post it for the Ultra Elite supporters, so you get that as well. The choice is yours. The link is down in the description portion of the video. Ultra Elite supporter, click on it and choose. From there, that's all I really have, guys, today. I appreciate everyone taking the time to watch today's video. If you have not subscribed to the channel already, please do so by clicking that sub button. Make sure to turn your post notifications on by clicking the bell as soon as you do that. And if you found value in today's video content, just basically breaking down, discussing from my opinion why range bar charts are so much better than any other chart out there, especially time frame charts. Okay, because basically I broke it down here in this video. To me, visually, I can just be able to understand the flow of the market a whole lot better. Take care. Please drop me a like on the video. Greatly appreciate it. Take care. I'll see you in the next one.